In the meantime, it's time for the morning trade. Meta Platforms completing its investment in Scale AI. Joining me right now, Schwab Network contributor JD Durkin here at the desk to explain a little more. I see it at 692 today, down just fractionally. Some of the big news here.
Yeah, well, Meta is down fractionally, like you said there, Nicole, along with most of the rest of the Magnificent Seven here. And, you know, if you've ever used these large language models for AI chatbots and stuff, you may have wondered, how exactly does AI know what it knows? How does it see? How does it understand? It all comes down to data labeling, and that's really at the core of this company, Scale AI, which Meta now does officially take over a 49% stake for, spending $14.3 billion in the process. That values Scale AI at $29 billion. This is the equivalent of Meta not just hiring some help, but really buying the tools, buying the tool shed, and taking over the master carpenter himself. That's 28-year-old CEO Alexandr Wang, set to join Meta now, Nicole, to lead the newly minted so-called superintelligence lab. I think a good way to view this is Meta's positioning relative to the Microsofts and the Googles of the world. They have made, really big strides to take in top AI talent that Meta has been kind of on the outside from, looking at their competitors increase their own data labeling initiatives by taking on top talent. This is now Mark Zuckerberg's firmly and deep-pocketed, I should say, response in this, now kind of getting into this agreement with Scale AI. We have seen shares of Meta up fractionally during the week, but of course today we got a lot going on, as you and Alex were just talking about. So a very important story for the stock, even on the backdrop of a lot of uncertainty in geopolitics on this particular Friday.
And we talk about the monetization of AI, and I see this significant investment that you're talking about in Scale AI values the company at more than $29 billion. I mean, it just shows you the AI race is on in a big way, right?
Yeah, absolutely. And we saw this previously with Microsoft and a company called Inflection AI. That deal, that investment, I should say, was made in March of last year. That was a $650 million investment. You got to imagine Meta's on the outside looking at deals like that, maybe with a bit of FOMO. And Google did the same thing in August of last year with Character AI. That was a huge investment to the tune of about $2.5 billion. This is firmly Mark Zuckerberg drawing his line in the sand, going after one of the top talents in Alexandr Wang and firmly bringing him into Meta's circle here. And I think that's really Meta kind of firing back at the industry and saying, hey, we are willing to play ball with the biggest names here. And, Alexandr Wang's been a very popular name and a young CEO, a fresh face in the AI space. So it's a big get for Mark Zuckerberg.
I mean, all this work on artificial intelligence, the efforts, what about the impact on Meta's superintelligence team?
Yeah, well, I think that's the whole goal, right? It's all AGI. It's this next development of artificial intelligence. We talk a lot about so-called agentic AI, and, we know that all the super smart people working on artificial intelligence, they've got wild visions for where they think this technology is going to go. And I think a good way to view this is Mark Zuckerberg saying, we are here in the sandbox with the biggest names in the industry, and we don't want to be left out on the outside.
And yesterday, Bank of America put a buy on Meta, folks, 765 target. That was yesterday. So I always like to talk about some of the most recent calls that came out. It's at 689 today. JD Durkin, great to see you. As always, a good look there at Meta and the very latest. And we're going to trade it next. So let's turn to Dan Deming, managing partner, KKM Financial. You're looking at this name here, down just fractionally, like JD said, many of the Mag 7 names like the market under pressure. How would you go about an example trade today?
Yeah, Nicole, I think, with the back off a little bit today, certainly Meta hasn't given up much ground. We're seeing another leg lower here as we speak, but we'll see if we challenge the lows that we did see overnight. But nonetheless, the general momentum here, the possibility that it could go up and challenge the highs that we did see early in February. I think there's still further upside, particularly given the fact that it's so resilient today, even with the bad news. So looking at today's trade example, trying to capture upside, but have the opportunity to get put in the stock at a better level. So what I'm looking at today is a trade example is buying the call spread at July 700, 725 call spread, and then selling the July 650 put. You can do that for even money right around 693. So actually at the 689 level, you can put it on for a credit. It gives you the opportunity to capture upside if we see a breakthrough 700 over the next month or so. And if we see some weakness, it gives you a buffer zone to the downside where you can get put into the stock around 650, where we did see some consolidation a few weeks ago.
Understood. Okay. I did want to get, before I let you go, Dan, just some big picture thoughts on the action today.
I mean, I think the key here, Nicole, is if we hold and do not test the lows that we did see overnight. Right now we're finding a little bit of a range. So the market's trying to decide if this news is going to become more problematic. I imagine as we move through the afternoon, the concern over the weekend of the market not being open could take effect. But nonetheless, I'd say overall, short term, it's a positive reaction given the fact that we have not gone down to challenge the overnight lows. And we continue to see some resilience here, particularly in the leadership. So you're seeing, again, some of these tech names really not down much relative to Meta. And, and even with the spike in oil and maybe some of the concerns that might have as far as the inflation moving forward, I think that the market was overdue for a little bit of a pullback. And the fact that we're only down about 0.75% right now is, I think, positive.
Yeah, understood. I mean, do you think the markets can still move higher and get past? We saw the price targets, some of the year-end price targets well above 6,000. We're starting to hear, I see more positivity in the second half of the year. What do you think about that kind of talk?
Well, it's leveling the playing field, so that's going to make it harder for it to get there, in my view. And so, I mean, we saw so much bearishness in April that, the reverse effect took hold. And now we're starting to see a lot of that flip back towards a much more positive theme. There's some headwinds for the market in the second half of the year. Do I think that the momentum can persist here for the next couple of months? Certainly I do, particularly if we can get through some of these hurdles with some of the disruptions based on geopolitical tensions and some of the tariff issues. But I think longer term, we've had 2 very strong years in the market. I think as we move into the fall, I think some of the headwinds, particularly surrounding the debt and interest rates, could take a hold and have a negative impact on the market where we're not necessarily going to realize what a lot of these analysts are now shifting towards much higher price targets.
All right, Dan Deming, great to see you, managing partner,
Thank
KKM
you.
Financial.